This is Cece. Welcome to the Orbit. It is Friday, December 22nd. It is the last trading day before a 3-day weekend. And in fact, we have two 3-day weekends coming up. So be aware of volumes potentially being light and liquidity potentially being a little light. A lot of traders are away from their desks this week. That does not mean that the market will not move at all. In fact, it might continue like we've seen the last few days. We're looking at the SPY 1-month chart, and you can kind of see that semi-volatile flag that has formed on this chart. We went straight up, and then we've sort of hit that 470 area of SPY, and we've kind of gone below and above it in about a 2% range up and down, which is more day-to-day volatility than we've seen in quite some time. And this comes after the December expiration. That might be affecting volatility, is that gamma backdrop may have shifted December 15th. There was a lot of gamma that expired on December 15th. It was unclear exactly how that would play out because we were then going into holiday trading. But the market has kind of indicated the last few days that it did kind of open up a little bit and has allowed, some of these moves we've seen that are over 1%. For a while there, we had only been seeing moves at or about the expected move, which had been very low, about 0.5% a day. So now we're looking at about 0.5% today. And, going out for the next week, we still see very low IV. You can see this there's even a 9 on there, a 10, 11, 12. You go out into January, you're basically at about 12 vol across the board. So very low vol. Market is slightly higher this morning. That follows the slightly better than expected PCE number that hit this morning. That is a closely watched Fed inflation gauge. It basically showed more or less no inflation in November, and then year over year just above 3%. Of course, the Fed's target is closer to 2%. They have sounded quite confident lately, although they've tried to walk that back a little bit, but it doesn't seem to have been affecting the market that they are on target for their inflation targets, and they are fairly confident going into 2024. Moving on to Qs, we've got about a 0.6% expected move for the 0 DTE. You can see those levels right there, 410. We're already up about $1.25 pre-market, but that was red right before that PCE number. We are at about the 408. This got as high as 410 this week, so keep an eye on those. Keep an eye on these big round numbers. 400, 410. Of course, in IWM, we're looking at that. We're looking at that 200 level. Kind of been bouncing. So you see these kind of flags forming in all these charts. This could continue into year end with light volume kind of hovering around there near a strike. But as I said, the gamma backdrop has definitely changed a little bit. And in fact, Goldman Sachs came out with a report yesterday talking about that swoosh lower we saw the other day in stocks. A lot of people were blaming 0 DTE traders. There was a lot of theories, but one of the main components was that this gamma backdrop that we've been living in since the rally began back in October, and we got very long gamma and very low VIX. It might be starting to change. The gamma backdrop has kind of expired away, and we might be entering January with a slightly different backdrop, not loaded with the market, not loaded with gamma. Dealers may actually be short call strikes to the upside. On top of that, you might see the VIX start to wake up. We saw yesterday stocks were green for most of the day, as was the VIX. And that's generally a sign of gamma clearing. It's generally a sign of, well, in a lot of cases, it would mean put demand. In this case, that might be put demand slightly, but there's been a lot of upside call demand as well. Obviously, if you're looking at options out into 2024, vol is quite low. The VIX, even though it's ticked up a little bit the last few days, it is very low. And for directional or hedging, you are seeing a lot of very inexpensive, historically type put spreads, call spreads to the upside, even outright puts, outright calls. So, if you are looking for SPY to go to 500, we're looking at it right now. The options market is only pricing out until April for that to happen. That shows you how inexpensive that is, because that's only a 6% move. And obviously, the market recently has shown a 6% move is nothing. And the same is true to the downside if you're hedging, if you're outright bearish, perhaps for a pullback to even 450, we're looking at, sort of March options for that. So you can position directionally and you are not getting penalized for going out in time.